All right, everyone, welcome back to Everything Business, right? In today's tutorial, I'll be looking at a 2016 paper, question 1, actually. It is a partnership question, right? I think it's pretty fun. It's a fun question, right? So we're going to just look at this question, and at the end of it, I'll tell you my difficulty rating, all right? So let's get right into it. All right, so it says Metivier and Moreno have been in partnership over the last year. Their partnership agreement includes the following, right? Interest on capital is 10% per annum. Interest on joins is 5% per annum, right? If you do not know how to do partnership accounts, then you would need to check out my video on partnership accounts, right? I'll put a link in the description, and I'll also leave a video tile at the end of this video so you can check that out, right? Because if you don't know how to do partnership accounts, then, you know, this will not make much sense to you. All right, so the first question, 1A, it says, other than the rate at which profit and loss is to be shared, name 2 other features that may be included in the partnership agreement. Now, we know that the partnership agreement is very important to a partnership type of business, right? So I gave 3 answers here just for your sake. So what could also be included is the rate of interest that is to be charged on joins, also the rate of interest that is to be paid on capital, and also the amount of capital that is invested, right, would also be in the partnership deed, right? Part B, it says, since the partnership agreement of Metivier and Moreno is silent, right, which means, you know, it is silent on the rate that should, the profit and loss sharing rate. So what rate should be used to share the firm's net profit or net loss? So where the partnership agreement does not speak specifically to profit sharing, then it will be shared 50-50 or equally. All right. So that's the first part. That's 3 marks. You know, very simple so far. Right. This is the first question on the CSEC paper, so you can just imagine that it's going to be fairly simple, right? But if you don't know how to do partnership accounts and you see this question for the first question right away, you know, you'll start probably getting flustered, right? But as I always tell you, always read through the question first. So 1C, it says Metivier and Moreno, who contributed capital of 120,000 in the ratio 7:5, recorded the following balances on the 31st of December 2015. So what they do, they give us the net profit here before interest. Then they have the long-term liabilities, right? 6% loan, which is the 6% is the interest rate. 41,000. They said that the interest has not yet been paid. Then they have joins for Metivier and Moreno, and then they say we should prepare the profit appropriation account for Metivier and Moreno for the year ended the 31st of December 2015. All right. So looking at this, you know how the appropriation account should look. You should by now, if you're going to be sitting the exam, you should have the format in your head by now. So we start with net profit, right? And this is the net profit figure before interest, right? What you could do here, after you put the net profit figure, you could subtract the interest. You could say less, you know, loan interest, right? You could put it here, right? But I decided to put it down here, the loan interest, all right? So we go add interest on joins. So we calculate the interest on join, 5%. For Metivier, it is 5% of 3,600. You may be wondering where I get the 5% from. If you look over here, it says interest on joins 5%. So that is where I get it from. All right. The same for Moreno, 5% of 1,920. That's $96, right? And you add them together. You didn't even need to put the interest on joins figures here. You could also put it here because you're just doing addition, right? Yeah, so you add them to the 77,404, you get 77,680. Then now, right, you can subtract your loan interest. This is where I chose to put it, right? Your loan interest, you subtract your loan interest, 2,460, right? You also have, if you had the salary paid, right, then here, salary would come here as well. I want you to keep all my subtractions in one area, right? So if you had salary would come here as well. Also, interest on capital should also be subtracted. So interest on capital is calculated on each partner's capital. So it's 10% of each partner's investment, right? How did I get 70 for Metivier and 50,000 for Moreno? So these are the capital figures. Metivier 70 and for Moreno 50. How did I get that though? Right? If you look up top here, it says the overall capital contributed by both partners is 120,000, right? In the ratio of 7:5. What that means, right? What that means is you would add the 7 plus the 5 and you would get what? 7 plus 5 is 12, yes. So Metivier should get 7, right? Divided by 12, multiplied by 120,000, right? That gives us a 70,000, right? So Metivier, right? It is 7 divided by 12, multiplied by 120,000, give us 70,000, this 70,000 here, right? For Moreno, right? Similarly, it would be 5 divided by 12, this 5 here, divided by 12, right? Multiply by 120, and that would give us 50,000. Now we need to find 10%. You may be wondering, where did I get the 10% from? The 10%, if you look over here, it says interest on capital, 10% per annum. So that is where I get the 10% from. So 10% of 70,000 is 7,000, and 10% of 50,000 for Moreno is 5,000, right? So you will add all of this information right here, right? 2,460 plus 7,000 plus 5,000 will give us 14,460, right? That is what you're going to subtract now from 77,680 to give the balance of profits, which is 63,220. And now this is the balance of profits that we are going to share up, right? And we have already stated how they are going to share their profit and losses, which is equally or 50-50. So all we need to do, right, is we need to give Metivier 50% or half of 63,220. So all you need to do is to divide this 63,220 by 2, and you get 31,610 for both of them. And you put the balance there, which is 63,220, right? Remember that when you share up the profits, right, it should be equal to the balance of profits, because that is what you're actually sharing up. All right. So yeah, so that's 1C. Personally, I think it is pretty simple if you know how to do partnership accounts. If you don't have any knowledge on partnership accounts, then you probably would have difficulty. I think, however, what they do here with the interest, right, is kind of tricky, and it may throw some persons off, but pay attention to these little things, all right? The part D of the question, it says, other account balances recorded for Metivier and Moreno are as follows. They give us the fixed asset information, current assets information, current liabilities information. Then they ask us to prepare the statement of financial position, which is the balance sheet, as at the 31st of December 2015 for Metivier and Moreno, showing clearly the firm's working capital and details for each partner's earnings in the capital section. Now, I know a lot of teachers don't really teach the balance sheet for partnerships, right? But this question actually asks for the balance sheet for partnerships. All right, so let's get right into it. So, your balance sheet already, you start with your fixed assets, right? Start with your fixed assets, right? The heading should be there, Metivier and Moreno, balance sheet as at the 31st of December, 2015, right? So it should be there. All right, so fixed assets, you start with the fixed assets, 220. They gave us that seat up the top here. Then we have our current assets, 18,000. This is there. We showed less our liabilities, right? Current liabilities, which is 48,576, right? So after you subtract your 48,576 from 18,000, you are going to get a negative figure, which is 30,576. That negative figure there would be your working capital figure. Yes, it's a negative figure, right? And so if you know what to do with working capital in the balance sheet, we add it to our total fixed assets. Now, because this is a negative figure, what will actually happen when you punch this in your calculator, it's going to subtract. And for those of you who have some math background, you will know that if you add a negative figure to a positive figure, you're going to eventually subtract that negative figure from the positive figure. So we get 189,424, right? And that's our first double line figure, right? Or you can say total net fixed assets, all right? Then now we move to the finance by section, right? Which is where most persons may not understand or know what to do, right? So you have to now create two columns, right? You have to name the columns rather, for one for Metivier and one for Marine, all right? So it's financed by capital, so you put in their capital figures, 70,000, 50,000. Then you add the interest on capital, right? Now you have to remember, if you look at the finance by section of the partnership balance sheet, right? It resembles the appropriation account, right? Or let me put it this way, it resembles the current account, right? If you look at the current account, you will realize that items on the credit side of the current account would be the items that are added here, and items on the debit side of the current account are items that are subtracted here, all right? Yeah, for persons who may not know how to use two columns, right, to do the calculations, you can add two more columns, you know, and that would help you to understand. So you could have a column here, right? So these two columns, if you had a column here, then this column and this column would be for Metivier, and you could have a column here and a column here for Maureen, and then you have a total column, but that is too much columns. So you have, you know, you can learn how to do it just like this, just the same, because it can be done like this, just the same. All right. So you're going to put the items that you would find on the credit side of your current account first. So capital, right? Obviously, capital would not be in the current account, right? Unless it's a fixed capital account, right? So you're going to have capital first. Then you're going to add the interest on capital for each partner. You're going to add the profits, right? Yes. So you put that there, right? And when you add them up, you get 108,610, 86,610 for Moreno. Then you're going to subtract your drawings and interest for drawings. Now, because these should be subtracted, I put them in brackets to indicate that they should be subtracted, right? And so what you will have to do, you would have to say 3,600 plus the 1,800, which would give you 3,780. And you subtract it from 108,610, you get 104,830. Do the same thing for Moreno, you get 84,594, right? And when you add these numbers at the bottom, you should get 189,424, which should be the same as the first double line figure at the top there. And there you have it. That's the end of this question, and that's 20 easy marks. So if you should ask me, think this question, the difficulty level of this question, it's around about 7 out of 10. I think it's for a question one, for the first question of the paper, I think it's pretty difficult, right? I think it's pretty difficult for the first question of the paper. If this could be a question 5, because it's pretty challenging. All right. So thank you very much. Well, good.